Randy Smallwood, CEO and President of Wheaton Precious Metals. Thank you very much for making time with Kitco.
Always a pleasure, Michael. Thank you.
Can you take us through the recent quarter?
What was a good, strong quarter for us? We've seen our mission at the start of this year was to have some good old boring organic growth and perhaps a couple of acquisitions over the course of the year. Obviously, a pandemic has livened up our results, but our first quarter was a pretty strong quarter. And even with the second highest cash flow we've ever had in the history of our company, and definitely the best first quarter we've ever had, we probably had a bit of an impact at the end of it from this pandemic. We did start seeing some issues with respect to production towards the end of March, and obviously we're going to see some impacts here in the second quarter with a number of suspensions. But yeah, the first quarter was a good, strong quarter. We've been saying it for a long time. Our company has got a lot of organic growth over the next 4 to 5 years that was starting to deliver, and we're seeing that. Peñasquito starting to see the best grades and some of the optimization work that Newmont is doing as new owners of Peñasquito, all really delivering. Salobo, again, continuing to perform or outperform. It's a good, strong portfolio, and the first quarter really reflected that.
You had, I seem recall that you had more PGM and you had more silver out of this quarter. Was this an aberration, or is that something that's going to pick up?
Yeah, I mean, we've got a pretty diverse portfolio. Current production is about 55% gold, about 40% silver, and about 5% palladium. So if you get one asset that outperforms, it's going to kick those numbers around. And Peñasquito, of course, with some of the challenges they had last year, Newmont really hit it out of the park. And that is a silver stream for us. So we get silver from Peñasquito. Antamina also had a good quarter. That's silver. And then with respect to palladium, all of our palladium comes from the Stillwater operation. So it all comes down to how each of those individual assets perform. But it's one of the advantages, I think, of a pretty good diversified portfolio that's pretty evenly split amongst some very valuable metals.
But could you thumbnail what happens to a miner when they have an obligation to a royalty or streaming company when they have a situation like COVID-19?
Well, with streaming companies, there is no, and with royalties, we are equity investors into these assets. And so there's no guarantees in terms of production. That's part of the partnership aspect of our relationships with these companies. So there's no guarantees. If you have delays, really, I would describe it as more of a deferral. We haven't lost that metal. It does just get pushed out into future production. It's a resource or a reserve that will eventually get mined and delivered to us. But we do bear a bit of the cost in terms of these deliveries. There is no guarantees. And at the same time, I do want to highlight that we work on being a partner of choice at Wheaton. And I'll give you a good example. Hudbay Minerals, obviously advancing the Constancia, the Pampacancha zone down at the Constancia mine in Peru. They have a completion test that had them having to meet certain obligations by the end of December of this year. So by the end of this year. And because of these COVID-19 issues that Hudbay is facing, we've actually given them a 6-month extension to that completion test. And so they now don't have to satisfy the completion test until the end of June of 2021. These are partnerships, and this is all about working with partner companies to try and develop. The stronger our partners are, the stronger we are. And so we constantly focus on that. And so we're not going to be ultra aggressive in terms of helping or pushing boundaries on impacts like this when companies themselves are struggling to find the best path through. We're here to be supportive and to try and deliver the best strength that we can on a go-forward basis.
Can you thumbnail the operations right now with COVID-19?
Sure. I mean, the Salobo asset still continues to produce for us. They've got some absenteeism issues, so we're not expecting. We do expect there will be a bit of an impact in terms of production, mainly because we are seeing some challenges from COVID-19, but they haven't suspended production. The expansion project is relatively on track. They have gotten rid of non-essential staff in terms of pushing that forward, but they still see that expansion project being achievable in 2022, 2023, starting to come on stream for us. So Salobo is doing well. Probably our next 2 biggest assets, we have 6 mines that are temporarily suspended, and that's 3 of them in Peru and 3 of them in Mexico. The 2 biggest ones is Antamina in Peru and of course Peñasquito in Mexico. Combined, they deliver a little bit over 20% of our cash flow. All indications are it is a fluid situation, but all indications are those mines should be up and running by the end of May. Now, we don't expect them to start up right at full capacity. Again, I think what's going to wind up happening is that we'll probably have some issues with people that may not be comfortable. So absenteeism is probably going to have a bit of an impact on this restart. But the longer that these operations move forward, and as long as they move forward, controlling the risks and not having any type of outbreaks or any issues along those lines, should give more confidence to the employees in terms of being able to go back and safely operate. There's obviously going to be changes in the policies and procedures and at these sites, maintaining strong physical distancing, and you're probably not going to be able to walk down the lunch line anymore, getting handed trays of food and stuff like this. It's going to be quite a bit. There's going to be a lot of changes that have to happen that already have happened actually at a lot of the sites. The ones that are currently operating, but the ones that are suspended, those will have to be implemented there too.
Randy, what are we seeing in terms of impact from COVID-19? Are we past the worst of it with Q1?
Well, no, Q1 captured. I mean, the pandemic really was sort of declared partway through March, and so I think in terms of financial impacts and impact on revenues and cash flows, Q2 is going to wind up capturing the bulk of it. The suspensions that we've had all started in late March, early April, and so our current cash flows are probably down about 32% from where they would be. We had to relax our guidance on April 1st. We had to announce that we had to relax the 2020 guidance. We have maintained our 5-year guidance. We're still confident that we can maintain the 750,000 gold equivalent ounces average over the next 5 years. But with respect to 2020, having 32% of our production on temporary standby during this second quarter is going to have an impact on the Q2 results. And we, until these mines start up and until we see gain confidence in terms of their ability to fully restart operations, we're not going to come back with updated guidance in 2020. So I would expect that that's going to be at least a month, possibly 2 months out before we'll be able to provide that guidance. So Q2 is going to capture the impacts of this from a mining company perspective. Offsetting that, of course, is we have seen some strength in the commodity prices, specifically gold prices. A bit of weakness in the silver side, but the strength in the gold prices will definitely help offset some of that impact here in the second quarter.
When you're talking to operations right now, what are the impacts that you're seeing with COVID-19 on a general basis? What is it settling down to? So I've been talking to the miners, and they say basically the hardest thing is just moving people. Just because you have to wash down or you have to do hygiene, and they were, for instance, talking about longer shifts. But is it hard, and is it going to, as this carries on, is this something that is going to, do you think it's going to have a deep impact, or are miners just going to be able to adjust?
Yeah, it's doing is sort of limiting the flexibility of moving people around. And so what companies are having to do and workforces are having to do is adapt their work schedules. Good examples out of the Yukon, where people have moved up to the Yukon because they don't want to deal with quarantines as they fly into the Yukon. So they're actually staying up there right through, even on their time off from these remote mine sites, so that they don't have to deal with quarantine issues as they travel back and forth. But it's a good example of how flexible this industry is and how creative the industry is in terms of getting the job done. What we've seen is less staff at remote sites, because the more people you have flying in, the higher the risk levels are. And so, non-essential staff and cutbacks on consultants, contractors that you might not need as much. There's just been changes from that perspective. Much tighter controls, especially, the mining industry is unique because most of our assets are remote locations. It allows us to have much stronger controls, or gives us the capacity to have stronger controls about who we let into these sites and how they get treated when they arrive. And so, temperature measurements and testing for the potential of having a virus should allow us, or should give us the capacity to really limit the impact and lower the risk levels at remote mine sites. And I think the industry is a bit unique from that perspective compared to other industries around the world. And so, those changes they have been made, and they'll continue to be optimized and improved.
Randy Smallwood, I think that's a great place to leave it. Thank you very much.
Appreciate this, Michael. Thank you.